Hello and welcome. This is Business Incorporated coming to you live from Channels Television here in Nigeria. I'm Chimezie Obi Iwagu. On the show today, Kenya launches first ever green bonds regulatory framework. Egypt issues $4 billion in foreign currency bonds. Plus, Eskom rescue package, a focus as South Africa's finance minister presents budget today. Let's get the show started now with the markets. And it looks like it's a green day for markets in Africa, as all showed green at intraday, indicating a positive midweek start. The JSE index in South Africa led the gains. The finance minister presents the 2019-2020 budget today. The NSE index was also in the green, as well as the EGX 30 in Egypt. On Tuesday, the Nairobi stock market closed in the red. And in the Middle East, markets were also in the green zone at intraday, led by Dubai Financial Market. Qatar followed with 0.96% gain, and then Abu Dhabi and Saudi Arabia. And in Europe, stocks were slightly higher in the morning amid rising hopes the world's two largest economies could soon secure a trade deal to end a protracted dispute. But for my conversation with Daniel, we will tilt a little bit away from trade war. Good afternoon, Daniel. Well, let's begin with Russia. What is happening there? The financial sector is in trouble. Some of Russia's biggest banks can only survive thanks to financial aid from government. Is this with love from Russia?
Yeah, yeah, you're right. I mean, excuse me. The banks, indeed, many of them are in trouble. And it's very interesting that we're talking about that today, because Vladimir Putin, the Russian president, is delivering his annual speech today. And lots of things have been changing there in the country. His approval ratings used to be extremely high. More than 80%, sometimes 85% were in favor of the politics of the Russian president. But this has changed during the last year quite often, and the reason mostly because is the financial situation inside of the country. When we take a closer look, and banks, are just one factor there, we are seeing that the economy is not getting on speed. That's a very big problem there. And yes, you mentioned the banks. We have to talk about the banks. A report is suggesting that some 150 banks in the country are on the brink of collapse, and the lack of capital is there a very big issue at the moment, and they are really in this constant crisis mode. The central bank in Russia usually tries to prevent this situation, but it also seems that they are kind of in this status right now, where they are taking the licenses of mostly smaller banks away. So yeah, it's really going to be interesting how all of this is going to unfold, and what Vladimir Putin will address during his speech today.
All right, let's look at the data front. We're getting fresh data and numbers today from Lloyds. How are they performing?
Well, first we have to remember that in general, mostly for banks and financial institutions, the timing right now is just so extremely difficult, because Brexit, in theory, is just 5 weeks away, and we don't know what in these upcoming 5 weeks is going to happen. Just today, we heard that Theresa May is having again big problems. Members from her own political party have decided today to leave. This is going to give her again a very hard time when next week she will be facing again a very tough discussion in Parliament. So because of that, it was quite surprising that Lloyds was able to deliver quite some positive numbers today. Investors were actually surprised about that. As a result, the FTSE 100 in London is way up in the green, as shares of Lloyds made quite a jump today. Well, let's talk about the numbers. Earnings after taxation or net profit soared by 27% there to 3.8 1.7 billion pounds. That's 5.02 billion euros. When you compare this to the last year we were at a level of about 4.43 billion euros. So these numbers are quite positive, but, you know, frankly speaking, Lloyds is kind of an exception there. When you take a look at some of the other banks, mostly also smaller banks at the moment, and financial institutions, they're having a much harder time. Also, it's going to be interesting what is going to happen with Lloyds, because we have to remember that very early already, when this Brexit discussion was underway, Lloyds decided to move their headquarters out of the United Kingdom. It's based now in Brussels, and yeah, it's going to be interesting what is going to happen in case of a no Brexit scenario. What's then going to happen with the headquarters and also with all those people that already left London because of Brexit?
Okay, let's look across the Atlantic. Japan's export numbers have been going to the lowest point since 2 years. Is this another effect of the trade tension between the United States and China?
Yes, exactly. I mean, we have to remember we have been talking about the trade conflict between the United States and China for such a long time. And yes, when we take a look at the worldwide economy, as a result of this, it has been slowing down. We have seen this happening here in Europe. Germany is just one example. And now we are seeing this happening in Japan as well. And in the case of Japan, it's actually quite surprising that the export numbers dropped that much. They dropped to the lowest point in more than 2 years, because Japan was just able recently to sign a new free trade agreement between the European Union and Japan. So those barriers that used to be there, they don't exist anymore, but still the numbers have been dropping. And I can tell you that investors are hoping that as soon as possible a solution can be found there in this ongoing trade conflict, because it did not just hurt the equity markets, as I said, the economy as well. Just taking a look for a second here behind me at the blue chip index DAX, we were able to get to the highest point actually here this year. This is also happening after Fresenius Medical Care and Osram, both listed here in the blue chip index DAX and MDAX. They delivered very promising numbers today, and as a result, blue chip index DAX made quite a jump today.
Well, trade, Brexit, earnings have continued to drive the market. Let's continue to follow the developments there. Thank you very much for your time, Daniel. And in Asia, trade stocks were mixed today after U.S. President Donald Trump hinted once again that a closely watched trade deadline in March may be pushed back. Mainland Chinese market slipped by the end of the morning session. The Shanghai Composite declined around 0.15%, while the Shenzhen Composite also slipped 0.36%. Hong Kong's Hang Seng Index rose 0.66%. Japan's Nikkei 225 rose 0.24%. Over in South Korea, the Kospi added 0.88%. The ASX 200 in Australia slipped 0.31%. And U.S. stock index futures were slightly lower, with market participants monitoring the latest round of trade talks between the world's two largest economies. At around 6 a.m. Eastern Time, Dow Jones Industrial Average futures indicated a negative open of less than 25 points. Futures on the S&P 500 and Nasdaq Composite were both little changed from the previous session. Market focus is largely attuned to global trade developments after officials from the U.S. and China launched a new round of negotiations on Tuesday. Well, away from the markets and back here, Nigeria's democratic process has attracted a lot of interest from the international community, and one would wonder why Nigeria's election matters to the world. Nigeria is Africa's largest democracy with a population of over 180 million people. The democratic process in Nigeria is of a major concern to the international community, as Nigeria serves as a bellwether for continental stability. Well, we are being joined now by the chief economist at the World Economics in London, Brian Sturgis, to get the perspective of the global authority on economic data. Good afternoon, Brian. It's good to have you on the show after a long while.
Good afternoon. Speaking from London, it's good to talk about another economy after the chaos we're seeing in Britain, but that's another story.
Sure. So we would like to get the views of the world economics. What do they make of Nigeria's democratic process, and how are they reading the numbers?
Well, obviously there's been a short-term cost in terms of the businesses, voters who have had to cancel meetings and so on. The biggest worry, of course, has been the reputation cost. In terms of the handling of the election. I think more important, really, though, is what's going to be when the election is held in a few days, what the actual result is. Certainly, internationally, there's a feeling that Nigeria definitely needs change, and it does need to really, with the unemployment figures, it really needs to open up its private sector. So I think. Internationally, foreign investors are looking at what's going to happen in terms of the result of the election. The cancellation is a hiccup. It's costly. It hits reputation. It'll be forgotten in a few weeks' time. But the result is very, very important.
Okay, from your perspective as an economist, why do you think Nigeria's election matters to the world?
Well, it's the largest economy in Africa, obviously. It's an economy which needs to open up a lot more. It's an economy where people have been looking. It's a signal for Africa itself, which is also a bit of a worry that under the administration you have currently, Buhari has not signed the Africa Free Trade Agreement. It hasn't been ratified yet. So very much, if the new president is Atiku, and if that's signed and signals that Nigeria is open for business, that will make a big difference. But it is really, given that it's the biggest economy, to not be in that free trade agreement is a bad signal currently.
Okay, aside from the fact that Nigeria is Africa's largest economy, Nigeria is also seen as a leading capital market ecosystem, a leading investment destination, and a vibrant diaspora group. What do you think would be the implications for these if this election doesn't turn out right?
Well, it depends what you mean by turn out right, of course. If we have the current president is re-elected, it will be more of the same. It will just not. It will just be a continued slow growth and stagnation. If there's a president like Atiku who will actually, if he does open up the markets, it will be an enormous signal, especially to the Nigerian diaspora. I mean, I teach at the University of Buckingham, and I teach Nigerian students. There's so much talent out there, but a lot of that talent is actually not being employed in Nigeria. It's got to be opened up. You've got to have people coming back and open businesses in Nigeria and have an economy which encourages entrepreneurship.
Okay. Now, Nigeria is not the only country preparing for election this year. South Africa, the second largest economy, is also preparing for the poll. Senegal has its elections scheduled for February 24, and of course a host of other African countries. Are there lessons for Nigeria to learn from these other countries? And of course, taking Nigeria and South Africa as a case, what will be the implications of their election for foreign direct investment into the continent?
Well, I think South Africa, you've almost got a slightly opposite case, whereas Nigeria, you've got a current administration which isn't really doing very much, and we need for something more interesting. In South Africa, of course, you've got the ANC, which will probably come through again, but the ANC is actually starting to, because of its, the fear of populism on the left wing, it's starting to talk about interfering with the independence of the central bank, although it sometimes stops the way. In South Africa, you've got the danger that foreign direct investment may be discouraged if the election, I wouldn't say it doesn't go the right way, but if the ANC does move in a more populist direction. Of course, that South Africa's loss could be Nigeria's gain. If Nigeria, very much opens itself out,
okay,
we could see an opportunity. But it would be better, of course, for the Africa as a whole to have two economies blasting away at full belt.
All right, let's hope for the best. Thank you very much for your time there, Brian. Brian Sturgis is the chief economist at World Economics, London. We'll take a break, and when we come back, we'll bring you an update from the Nigerian equities market. Stay with us.